What's up, guys? Welcome back to the pullback effect. We've been talking about trending, or not trending, but market structure on our previous video. In today's video, we're going to talk about support and resistance, okay, in terms of the quarters theory. So what the quarters theory is, they're pretty much key psychological levels that we mark in our charts, or should be aware in our charts, because these psychological levels should help us determine good key points for the market to act as support or to act as resistance. Now, the reason they're called quarters levels is because they go up or down from quarter to quarter, right? We have the big figure, which is 100 levels, the mid figure 50 levels, and the quarter figures 75 and 25. Thus, you have the 25, 50, 75, and 100 big figure levels. So let's go into the charts real quick. And I've already mapped out each quarter level here for you on the Euro USD chart. Okay, you can see how it goes from 8,000 to 825 to 850, 875, then 900, 925, 950, 975, and zeros, 0.25, 0.50, 0.75, and 100. So these are quarters levels. These are the key levels that we use to help us determine certain supports and resistance. Okay, and why it's called from 25 to 50, 75 here without counting the zero, it's because it's counted by pips. Okay, I'm not going to go into detail about pips here because it's a really basic lesson, and I'll just go through it real simple how you can count pips on any given pair. The way that you can count pips is the second number from right to left. That would be your first pip. Okay, so this 5 is 5 pips. So the 2 would be 25 pips. So from 25 to 50, that's a 25 pip movement. From 50 to 75, that's another 25 pip movement. So that's why we have 25, 50, 75. Okay, the very first number, those are called pipettes. So whenever you hear the term pips, now you know how to count them, right? It's from the second number from right to left. It doesn't matter how much decimal points you have here after the decimal. Like, for example, on USD JPY, you can see that you actually have 3 decimals instead of 5 decimals as you have on Euro USD. Okay, even though on USD JPY, even though you have 3 decimals, the pip number would be the second number from the right to the left. So that's why here you would have zeros or big figure, and you would have the 50, etc. Okay, so let's go back to the Euro USD chart and talk a little bit more deeply about the quarters level. As you guys can see, like I said, I already mapped out the quarters levels here on the charts. And if you look at the chart, you can see how these levels are significant for price, how they actually act as resistance and support areas, right? You have price going up, and where does it key off, or where does it make the high? It makes a high at the 0.925 level and comes all the way down into what level? Comes down to the 0.725 level. Then comes right back up into the 0.925 once again, then comes down to the 0.800 level here. It goes a little bit under it, but the discrepancy of each level could range about 5 pips. That's why on this here, on this uptrend, you can see how we've been going in an uptrend in this area and here. And then we actually start a downtrend. Okay, you can see how the very high actually misses the big figure 100 by less than 5 pips. So less than 5 pips would be 1095, and you can see that the high here. If you look at the numbers here, you'll see how this here is the open, high, low, and close of each candle. So if I place my mouse right on top of this here, we'll get the high at 1.10956, making the high right there. So it's a little bit less than 5 pips discrepancy. So whenever you have that type of levels not meeting about 5 pips before getting there, especially if it's a big figure, it could mean that they're actually the price is actually protecting that level and it's not wanting to go higher. And it could be most likely for a new trend to start forming. As we have here, we have the uptrend almost getting to that big figure level. It failed it by 5 pips and it started going downward to another key level, then comes back up. Once again, fails to hit that big 100 level. And then we finally start making lower lows and lower highs, lower lows. We make a little bit of a higher high here, but as I taught on my previous video, when you usually have downtrends, you don't always have a perfect lower lows and lower highs. And it's especially when you're starting to begin a downtrend, this is when you'll usually actually see that there's higher highs, but the trend will still continue going lower. Thus, it takes about it takes a little bit of time for price to actually start trending in a matter as a perfect downtrend. But I want you guys to look at this here. Look how these levels act really good as support and resistance. You can see here that we come down and then come back up, hit this 1075 quarter level here as resistance. And yes, we wick above it, but look, I want you guys to notice how the bodies close on each level. Okay. The true volume of price action are formed or are read inside of the bodies. Okay, not so much the wicks, but the volume of it, or what will tell you exactly the story or of price action will be the bodies of the candlesticks. So you can see how the candles actually close below that level. We come down. Yes, once again, we wick, but look at the body's closure here. We close right above, acting as support, meaning that we're most likely going to retrace. Look at these bodies here. We continue going higher, failed by 5 pips or less, then came all the way down, making a new lower low, hitting a new 0.975 level. And once again, we do wick through it, but look at the bodies. We actually act as support, closing above it. And then we come back up here, taking out a high or liquidity, which on different videos we'll start talking more about liquidity. I actually do already have a video where I talk about liquidity in this YouTube channel. So if you want to learn a little bit more about liquidity, go ahead and click on that video. I'll leave a card out here for you to just click it and watch that video after you're done with this one. But let's continue with this lesson here. As you guys can see, we come back up, closing our bodies just under this level, and we continue down to where? To a new quarter level here. So if you look at where the lows are being made and you ever wonder how low, if we take out a low, how low can we actually go? Well, if you look at here, we made this low here, came up, made a high, and then we came down for a new low. Where is the low going to be made? It's most likely going to be made on the next quarter level. So we added this quarter level, which got respected with the bodies of the candles, came back up for a retracement, and then came down. How low can we go? To the next quarter level down here. Respected that, had a deeper retracement to where? Above a high and into a quarter level. Now, next we came back down low. We're going to take this low out. Where is the next support area going to be found? It's going to be obviously found on the next quarter level, which we have down here. We're on a downtrend. The next quarter level would be the 0.950 level. We consolidate a little bit, bang around this quarter level and the 50 quarter level as well. Then we come up above this high, where we saw a little bit of resistance. So where is the next quarter level going to be, or going to act as resistance? Right up here. Okay, you can see how the body's close to that level there. Okay, and obviously the quarter levels aren't just the only thing that you will need. In future videos, I will be explaining more concepts for you to be able to benefit and be able to use these other concepts with the quarters levels all together and figure out your own strategy on how to buy or look for buys and sells in the market. So once again, like I mentioned, we have that resistance level going here. Then what do we expect if we start rejecting? Well, we should, since we are in a downtrend, making lower lows and lower highs, we should see new lows being made, right? So we have the resistance there, consolidate a little bit, and then we come down to where? The next quarter level, which is here. Consolidate a little bit, we wick a little bit higher, failing 5 pips or lower from this quarter level. So if it fails and goes lower, what does that mean? We're most likely going to reach the next quarter level. And we come right back up, hitting this level as resistance, and come back down. We went through this low, so where we're going to head towards next, this level, or if we go even more deeply in a more aggressive manner like we see here with this candle, then we're most likely going to see some support until the next level that we have here. Okay, and once again, we have a retracement. We're hugging or consolidating around the quarter level or around here. You can see how the range from this low to this high, it's actually hugging the middle from the quarter level that we have here. And we finally come up, hitting this level as resistance, and then come back down. Where are we going to come down if we break this low? To the next quarter level down right here. So that is a way that you could use these levels here. If you are beginning to understand these types of key psychological levels, I mean, it would be good for you to have them on your charts. That way you could see how they actually respect and how they work out. But once you start being more comfortable in noticing these levels without them being on your chart and actually just seeing where prices currently at, just counting the pips, you know, it's pretty easy. Big figures are 100s, 25s, 50s, and 75s. So later on, it's going to be easier for you not to have them in the charts, but just by watching the charts itself, you know, in your head, you can obviously see where the next quarter level could be. But if you're barely starting in trading, it would be best for you to have it marked. It's good for you to have your charts overwhelmed in the beginning. That way your eyes could get used to finding things easier. And as you gain more experience, you'll start removing stuff out of your charts and just have a imaginary representation in your head and about these market structures and key psychological levels as well. But that's going to be all for this video. On the next video, we're going to be going into the topic of using Fibonacci levels as well. That way you can start having a better understanding as to how to read price action. Okay, so I hope you've been liking these videos. If you're new to this channel, make sure to subscribe. If you like this video, make sure to like it. And that will be all for today. I'll see you guys on the next video.